Hey everyone, welcome back to Derivatives and Risk Education and the Trader Insights series. We've covered a lot of essential ground in preparing you for a trading career, from foundational steps to interview essentials. Today, we're building on that by diving into what many consider the core of trading interviews, the technical and market based interviews. So, why do firms dedicate so much time to these types of questions? Firstly, they want to assess your core knowledge. Do you truly understand financial products, how markets function, and the economic drivers that move them? Secondly, they aim to evaluate your analytical thinking. Can you break down complex market scenarios, identify key variables, and form logical conclusions, often under pressure? Thirdly, it's to gauge your market awareness. Are you actively engaged with current events? Do you understand their potential impact on various asset classes? It's about demonstrating genuine curiosity beyond just the headlines. Fourth, these interviews are a way to test your interest and passion. Your ability to discuss market dynamics in detail often signals a deeper commitment to the field. And finally, they assess your problem solving under pressure. How do you articulate your thoughts when challenged or presented with an unexpected scenario? It's not just about knowing facts, but about how you think with those facts under pressure, much like on a trading desk. Now, let's talk about the core knowledge areas you need to master. First up is macroeconomics and geopolitics. This involves understanding central bank policy, like the Federal Reserve, ECB, or Bank of England, and how their decisions on interest rates impact markets. You also need to be familiar with major economic data releases, such as CPI or unemployment figures, and how geopolitical events like elections, conflicts, or trade wars can ripple through financial markets. Next, and critically important, is a solid grasp of financial products and asset classes. For equities, you should understand stocks, indices, key valuation metrics like PE ratios, and market capitalization. In fixed income, you need to know about bonds, treasury yields, duration, convexity, and credit risk. Foreign exchange involves understanding currency pairs and the factors that influence exchange rates, like interest rate differentials and trade balances. For commodities, focus on supply and demand dynamics and major commodities like oil and gold and how geopolitics can affect them. And then there are derivatives. You should understand options, calls and puts, their moneyness, basic payoffs, and factors affecting their premium, such as volatility and time decay. Also, familiarize yourself with futures and forwards and have a basic understanding of swaps. You'll also need to understand market microstructure. This includes different order types like limit, market, and stop orders, and concepts like the bid ask spread and liquidity. Finally, foundational understanding of basic valuation concepts like discounted cash flow, DCF, and relative valuation is essential, even if you won't be building full models yourself. Crucially, understand that these markets are interconnected. A move in interest rates affects equities, which impacts FX, and so on. Firms want to see you grasp these relationships. So, what types of questions can you expect in these interviews? You'll definitely face conceptual understanding questions like explain duration, what is implied volatility, or how does a rate hike impact bonds. These test your fundamental knowledge. Then there are market commentary or view questions. What's your view on the S&P 500 right now and why? Or what's the most important economic indicator you're watching? You might be asked to discuss how a recent news event would impact a specific asset class. Trade ideas are a common and critical component. You might be asked to give me a trade idea and walk me through the thesis, risks, and potential entry and exit points. When pitching, structure is key. Clearly articulate your thesis. the fundamental reason why this trade should work. Identify the catalyst. What specific event or data release will realize your thesis and move the market? Outline the risks, not just general market risk, but specific identifiable factors that could make the trade go wrong. Discuss entry and exit points, how you'd put the trade on, what your profit targets are, and crucially, where you'd cut your losses. Finally, think about sizing. How much capital would you allocate given the risk reward? Don't just present the upside. Critically assess the downside risks and what would make you exit or reverse the trade. This demonstrates true risk management thinking and a realistic understanding of market dynamics. You might also encounter brain teasers and logic puzzles that can sometimes have a market-focused twist. Remember to revisit video 8 for a deeper dive into how to approach these. And finally, there'll be mental maths and quick calculation questions. These are crucial for rapid decision making on a trading desk. We'll be covering these along with market sizing and estimation in a dedicated upcoming video, so stay tuned for that. Now, let's talk about how to prepare effectively for these interviews. Stay updated. Read financial news daily from reputable sources like the Wall Street Journal, Financial Times, Bloomberg, and Reuters. Don't just read the headlines, understand the why behind market movements. Follow respected financial commentators and analysts. Develop a habit of forming your own market thesis before checking expert opinions. This builds independent thought. Structured learning. This means using textbooks, for example, John Hull for derivatives, Frank Fabozzi for fixed income, to build a deep understanding. Online courses, like those related to the CFA curriculum, can also be invaluable, as can revisiting your university coursework. Practice articulating trade ideas. Don't just read about markets, form your own views. Practice explaining your trade ideas clearly, including your thesis, the potential upside and downside, and the catalysts that would make the trade work or fail. And always engage in mock interviews. Practice with friends, mentors, or your university career services. Record yourself to identify areas for improvement. The goal is to get comfortable verbalizing your thought process, not just memorizing answers. When you're in the interview itself, here are some key tips for acing it. Think out loud. This is probably the most important piece of advice. Verbalize your reasoning, assumptions, and calculations. Interviewers care deeply about your thought process. Thinking out loud also allows the interviewer to guide you if you go off track, turning a potential wrong answer into a teaching moment. Adopt a structured approach. Break down complex questions into logical, manageable steps. A clear framework for your answer shows organized thinking. Have a view, but be flexible. It's good to have conviction in your market opinions, but be open to counter arguments. Demonstrate that you can adapt your view if presented with new, compelling information. Also, it's okay to say, I don't know, but I can figure it out. You won't know everything. Instead of bluffing, explain how you would approach finding the answer or what resources you would use. Be concise and clear. Get to the point. Avoid rambling or using jargon unnecessarily. Clear communication is paramount in trading. And don't be afraid to ask clarifying questions. If a question is ambiguous, ask for more information. This shows you're engaged and thinking critically. Finally, let's touch on some common pitfalls to avoid. Bluffing. Interviewers can spot it. Honesty and showing how you'd learn is better. Generic answers. No real market view, just repeating the headlines. Lack of structure. Disorganized thoughts jumping around. Not explaining why. Always provide the underlying reason behind your statements or conclusions, as the why is often more important than the what. In conclusion, technical and market-based interviews are your opportunity to showcase your knowledge, analytical abilities, and genuine passion for the markets. They are demanding, but with consistent and focused preparation, you can excel. Look out for upcoming videos where we'll dive into mental math, including market sizing, probability, and some more challenging brain teasers. If you found this video helpful, please hit that like button, share it with someone who needs this advice, and make sure you're subscribed to Derivatives and Risk Education for more trader insights. Thanks for watching, and I'll see you in the next video.